to our weekly webinar series. My name is Faiza Hashmi. I'm the tax director here at KRESS Cooper. Today I've been joined by my colleague Mahar Afzal, and together we will be taking you through today's webinar. Now, the topic of today's webinar is permanent establishment and its taxability. Now, permanent establishment is a very important concept in the corporate tax law, both from a domestic perspective and also from an international tax perspective. And we know that it's very confusing, the concept of permanent establishment. And so we hope that today we can simplify, the taxability of the permanent establishment under the UAE tax law and give you a little bit of history about the permanent establishment concept internationally as well. Now, we have previously discussed permanent establishment when the law came out, and you know that we have been doing weekly webinars. We have already done a webinar on permanent establishment, but now since a lot of things have changed and a lot of new information has come in, guides and from FTA, so we wanted to revisit this important topic once again. But if you have missed our previous lecture on permanent establishment or on any other topic, or if you want to revisit today's recording of today's webinar, then they are available at our YouTube channel. Our handle is KRESS Cooper, and feel free to go and check out all our webinars are there. So coming back to the topic of today, permanent establishment and its taxation. Now, usually for any company who wants to expand their business in a new market, so either it can be domestically or it can be internationally, they have two avenues to do that. One, they can do that by forming a subsidiary, and either they can form a permanent establishment. Now, subsidiary is the subsidiary as compared to the permanent establishment is a separate legal entity. So what happens is subsidiary, if you're using the method of subsidiary and you are forming a subsidiary in that new market domestically or internationally, then that company will be treated as a separate legal entity and will be taxed for that. Now, we will not be discussing the taxation of the subsidiary. We have discussed that in previous webinars as well, and a little bit of Mahar will touch upon that. But today our main focus is on the permanent establishment. So if the company decides that they want to form a permanent establishment. Now, this permanent establishment, unlike the subsidiary, it is not a separate legal entity. It is an extension of the main company. They are using these fixed places of business, either locally or internationally, and there where the substantial business activity is being carried out. So that is basically a permanent establishment. Now, in the permanent establishment, like we said, that it can be formed domestically as well. So that would be a domestic permanent establishment, or it can be in a foreign jurisdiction, which we term as foreign permanent establishment. What are the types of permanent establishment? When we say a fixed place of business, we mean by that, and where usually the activities are being carried out consistently. That can be like a manufacturing facility, a branch, an office, and usually the income from a PE, it is either being subject in the same state where the main company is, or either in the jurisdiction where the income is being sourced in case of foreign PE, you can say. So like we said that the PE is an extension of the main company. It is a unit business unit of the main company. So for example, if the main company is being taxed in one country, so it is being taxed for, usually the concept is the worldwide income is being taxed there. So the income from the PE will also be taxed. Now, if they have a foreign PE, then it could be that, in the foreign jurisdiction, there might be foreign laws that will be taxing the income of the PE that it is generating from, the business activity conducted in that foreign country. So it might be that they are getting taxed there as well. So that is where the concept of foreign tax credit comes, because international double taxation comes here, where, the main company has already paid the taxes on the income from the PE, because they are, liable to pay tax on their worldwide income. And on the other hand, the PE has to also pay tax in the foreign jurisdiction if the law there is such. So in this is where the concept of foreign tax credits and exemptions come in, and usually in the laws of the different countries, you will see that there will be exemptions available for foreign permanent establishments, or foreign tax credit would be available to the main company where they paid taxes twice. So that's like the double taxation. Now moving on, we would like to explain a little bit about the history of the permanent establishment as well. Now, the original concept of the permanent establishment, that can be traced back to Germany. So in 1985, in 1985, the concept of the permanent establishment that we know today it was first seen in the Parisian Industrial Code. Now, Parisian Industrial Code is basically in Germany because Prussia is a state in Germany. So first, this concept started back in Germany. Later in 1869, Prussia and Saxony, which were two German states, they had concluded first the successful ever tax treaty. So it was not between one country and the other; it was between two German states. It also specified the condition for taxation as a standing operation. According to Article 2.1 of the treaty, a non-citizen was taxable in the state where an enterprise used a business establishment. So the Parisian concept, if we can say, is of standing operation, required two conditions to tax the income in the state. It was either they have to have a fixed location in that other state, and the enterprise has to have an intention to continue performing the business activity. So it has to be continuous activity, like I said, not like a one-off activity. So this was the initial concept of the permanent establishment, which started in Germany. Moving on then, in 1909, the word permanent establishment was then first time used in the German Double Taxation Act. So that was also to stop the double taxation, like we said, that this can give rise to double taxation where in both the states it's being taxed or in two different countries it's being taxed. So first time this concept was in Germany, and to stop the double tax between the German states, they had taken out this German Double Taxation Act. And in 1928, the League of the Nation, they developed a model similar to this to tackle the cross-border. This is the first time the cross-border double taxation was being, acknowledged and thought about, and people then developed a similar kind of concept for permanent establishment in the case where it is two countries, and a cross-border double taxation was taking place. And then since then, we know that a lot of work has been done on tax treaties. There are a lot of double, international tax treaty. It is for avoidance of the double taxation mostly. And under the OECD Model Tax Convention on Income and on Capital, this is called the OECD model, and also in the United Nations Model Double Taxation Convention between developed and developing countries, which is usually generally called the United Nations model. So that is how the concept of today, the recent concept of permanent establishment has come about. So that was a little bit about the history of the permanent establishment. Now, the OECD model at the moment is what probably everyone has heard the most common, basis for defining the PE. Usually, the concept of PE is being defined there, and that is what most of the countries have picked up in their local tax laws. And the same is the case with UAE, that they have also taken the definition of the permanent establishment and the concept of permanent establishment from this OECD model, particularly the Article 5 of the OECD Model Convention, which is dealing with permanent establishment. And the same basis has been taken in the UAE, like I said, corporate tax law as well. Now, what does this Article 5 say, and what is mentioned in the UAE tax law as well, that any permanent establishment of a foreign company in the UAE, that would be assessed based on the following three key principles. So the first is the fixed place of business test. So like we said, that there has to be a fixed place of business where the decisions are being taking place, where business activities has been continuously happening. Or if you do not have a fixed place of business, like a branch or an office or a warehouse. So then the second way how a PE can be formed for a non-resident is that if there is a person, agent in the country who is basically habitually doing contracts on behalf of the non-resident, it's like an exclusive agent. So that also gives rise to a PE, and or any other form of nexus in the UAE, which the cabinet decision has at the moment clarified that it is the immovable property in the UAE. So these are some of the way how the PE for a foreign company in the UAE can be formed. So we will be discussing all this later in the slides as well in more detail. So like we said, if coming to the UAE corporate tax law, so there are two articles that are dealing with permanent establishment. So Article 14 of the law, which is dealing with the domestic establishment. So this article, it will tell you that, in which cases the PE of a non-resident can be formed, what is the fixed place of business has been defined there, what is not included, what are the exceptions, what is a dependent agent, who is an independent agent and not considered as a dependent agent, It also gives the cases for the natural person where PE will not be formed, the exceptions. Then the Article 24 of the law, which is the foreign establishment, dealing with the foreign establishment, permanent establishment, it gives you, the taxability for the PE which are out of the country. What is the foreign PE? What is the taxation for that? The elections, like we said, that usually the countries have an option for an election or foreign tax credit. So that election and all that is also detailed in Article 24 of this law and any exceptions as well over there. I will hand it over to Mahar now, who is going to take you a bit more in detail about permanent establishment and about what is stated in the UAE law.
Thank you very much, Faiza, and thank you very much to everyone joining us once again. So we are discussing permanent establishment today, and history go back to the 1845. Means this is an old issue, and it has already been decided in the 18th century that from wherever the people are generating the income, and if they have any permanent place of business, they are liable to pay tax there. This is basically the same thing being replicated again and again in different global laws and even the OECD model, and the objective is same, where from where you are generating the income, you are liable to pay tax there. Source, if the income is being generated from UAE, you are liable to pay tax there. If the income is being generated from USA, you are liable to pay tax there. If the income is being generated from UK, you are liable to pay tax there. This is the basically crux. This is the summary behind this, why the concept of permanent establishment has been introduced. And as Faiza said, there are two types of permanent establishment. There can be two types of permanent establishment for the businesses in the UAE. Even the businesses out of the UAE. As per the UAE law, there are two types of permanent establishment: domestic permanent establishment and foreign permanent establishment. Domestic PE, it has been defined in the law that this is a fixed place of business of a non-resident person in the UAE. I'm repeating, fixed place of business of a non-resident person in the UAE. This is called domestic PE. How it can become PE? There is a specific criteria based upon this. We will see what is the criteria to become PE in the UAE. Then we'll see the taxation of the domestic PE as well. And foreign PE, apparently it looks like this, that the fixed establishment, a fixed place of business of the domestic, of the UAE businesses out of the UAE, this is called foreign establishment. And it has been defined in the law as well. We'll go through this. So how it can become a foreign PE? We need to look into this. Then we'll look at the taxation of the foreign PE as well. At the end, we will have some more concepts like withholding tax applicable on the PE. Can the PE can become a part of the qualifying group business? Can they enjoy the business restructuring relief? Can they become a part of the tax group? We'll look into this, all these things in our lecture today. So as I mentioned, domestic PE is a place of business or other form of presence of the qualifying free zone person. Outside the free zone, this is called domestic PE. As I mentioned, domestic PE, if a qualifying free zone person is there and qualifying free zone person has a head office on the mainland, or the head office is a qualifying free zone person, they have a branch on the mainland, it will become a domestic PE. Assuming this is a UAE, this is a free zone. In this free zone, might be there is a head office or branch is there, or branch is here, or head office is here. This will become if they have opted to become a qualifying free zone person, if they are the qualifying free zone person, this head office or this branch will be considered domestic PE. And foreign PE, it has been defined in the law, a place of business, other form of presence outside the state of a resident person. Means different UAE groups, various big groups are there. If there are branches out of the UAE, these branches out of the UAE, fixed place of business, permanent place of business out of the UAE for the resident person, it will be considered foreign PE. So this is the domestic PE, this is the foreign PE. In the vice versa, it will be considered foreign PE for a business which has been established out of the UAE. Assuming there are some big groups in UK or USA, they have the branches in UAE. their branches, it will be considered foreign PE for the UK businesses, but for the UAE, it will be considered a PE of the non-resident person. In the same way, if I'm asking the local group that has a various branches in the UAE, we can say it has not been defined in the law, but we can say these branches in the UAE, these are their domestic PE, but it has not been particularly defined in the law. In the law, it has been defined that if the qualifying free zone person has any fixed setup in the UAE in the form of head office or in the form of branch, this will call domestic PE, because it taxation depends upon the nature of the setup. Will be, that's the reason that we're discussing right now what is domestic PE and what is foreign PE. If I'm asking what is the PE of the non-resident person, we have already discussed so many times that these person can be classified as the exempt persons, out of scope persons, or taxable persons. These taxable person can be a resident taxable person, it can be a non-resident taxable person. In these non-resident taxable persons, it can be juridical persons, it can be natural person as well. These here it can be the same thing applicable here as well. Here it can be juridical persons and natural person. This is a juridical person, this is a juridical person, these are natural person. The same thing is applicable here as well. These non-resident taxable persons, these can be juridical persons or natural person. If these juridical persons or these natural persons, they have a permanent establishment. What is permanent establishment? That we'll be discussing in our coming slides. If they have the permanent establishment in the UAE, then they said income attributable to that permanent establishment will be subject to tax in the UAE. This is the law. So if the non-resident person have a PE in the UAE, income attributable to that PE will be subject to tax in the UAE. This is the law. So now we need to establish what is this PE and how this PE can be established. The same thing they have replicated here by the FTA as well. I can go through this quickly. This is the same thing that we discussed in our previous slide. The resident person, juridical person, natural person, we are not discussing this today. We are discussing this non-resident person. Non-resident person can be a juridical person, it can be a natural person. If this is a juridical person, has a PE in the UAE, no PE, it will not be subject to tax in the UAE. They have a PE, income attributable to the PE will be subject to tax in the UAE. In the same way, natural person has a PE in the UAE, no. If the natural person has not any PE in the UAE, they will not be subject to tax in the UAE. If the natural person has a PE in the UAE and the income from that PE is exceeding more than 1 million dirham annually, then they will be subject to tax in the UAE. Otherwise, they will not be subject to tax in the UAE. The reason it has been given in the respective decision that if the natural person is generating any income up to 1 million dirham annually, they will not be liable to corporate tax and they will not be liable to get themselves registered. So this is the reason natural person, PE. First question is, do they have a PE in the UAE? Yes. Income generated from the PE more than 1 million? Yes or no? If no, they are not subject to tax. If more than 1 million income is being generated from the PE, then income attributable to that PE is subject to tax in the UAE. So PE, Article 14 of the law. Article 14 of the law says PE, we have already discussed PE exactly as per the law. This is the PE is the fixed place of business of the non-resident person in the UAE. And this fixed place of business can be in the form of fixed or permanent place of business. This fixed or permanent place of business, it can be a branch, it can be office, it can be factory. We'll be discussing in our coming slides. This is the first option, that non-resident person has a branch, non-resident person has office, non-resident person has factory in the UAE. Important thing is, if this non-resident person has any subsidiary in the UAE, this subsidiary will not be considered PE of the non-resident person, but it will be considered resident taxable person. I'm repeating. If the non-resident person has any subsidiary in the UAE, this subsidiary will not be considered PE of the non-resident person in the UAE, because subsidiary is a separate standalone person. and this is not an extension of the main company. Subsidiary in the UAE of any non-resident person will be considered a resident taxable person. Second can be person as a habitually. If the non-resident person has any agent in the UAE and that agent is exclusively working for the non-resident person, then the law says it will be assumed that the non-resident person has a PE in the UAE. Third, the law says in case any nexus like immovable property in the UAE, this immovable property will be discussing this separately. I believe it should not become a part of the PE of the non-resident person, because nexus of the non-resident person in the form of immovable property, it has been discussed altogether separately in the law. So I'm removing it for the time being from here. So three categories: fixed or permanent place of business in the form of branch, office, or factory. If the non-resident person has exclusive agent who is exclusively working for the non-resident person, or any form of nexus that has been defined by the cabinet, it will be considered a PE of the non-resident person in the UAE. But there are some exceptions. Exception will be discussing in detail as well. Quickly going through, if any of the business in the UAE, they are providing sport services or the agent is not exclusively working for the non-resident person, then the law says it will not be assumed that the non-resident person has a PE in the UAE. So the first thing is here, fixed or permanent place of business. What the law says, Article 14 of the law says, non-resident fixed establishment, a place of business, place of management where the management and commercial decisions are necessary to conduct the business are being taken, that place will be considered fixed establishment. Or they said branch will be considered fixed establishment, office will be considered fixed establishment, factory will be considered fixed establishment, workshop will be land, building, or other real estate property will be considered fixed establishment, installation of the infrastructure, it will be considered fixed establishment of the non-resident person for the exploration of renewable and non-renewable natural resources. Further, they said mine, oil and gas well, quarry for the place of extraction of natural resources, including vessels and structures used for the extraction of such resources, will be considered fixed establishment as well. And once it will become fixed establishment, it will be considered PE of the non-resident person. Any building site, construction site, having a life more basic project for the period of more than 6 months. Any suppose one company, USA company, they are doing construction in the UAE, they are planning to have set up construction, they set up an office. Office is more than they set up the office for more than 6 months. Once they have set up the office for more than 6 months, in the language, in the eyes of the law, it will be considered that the USA company has established the PE in the UAE. An important thing is, they said including connected activities that are conducted at the site or project by one or more related party of the non-resident person. So if the non-resident person, they are related party, they are have any construction site having a life more than 6 months, even by the related party, then it will be considered that this person has PE in the UAE, and we know the related parties are up to fourth degree of kinship. Fourth degree of first degree of kinship, siblings, father, mother, brothers, cousins, uncles, these up to the fourth degree of kinship. So if the fourth degree of kinship, they have any setup and they set up, this is going, life is more than 6 months, period is more than 6 months, this is the construction site, building site, assembly or installation site, supervisory site, then it will be assumed that the non-resident person has a PE in the UAE, even these all setup has been done by the one or more related party of the non-resident person. So these are the areas where the law says this will be a fixed establishment. So most of the time we are discussing about the branch, office, factory, land, building. So we are focusing on this, where the management is based and taking the decision. It will be considered the non-resident person has a PE in the UAE. They said this is exception of the Article 141. They said if you have fixed establishment, branch, office, factory, exploration site, construction site, real estate, all these management decision, all these things will be considered as a PE. But if all these setup are for sport, they are providing sport functions, they are not providing the main function, then they say it will not be considered PE. Sport function will not be falling under the definition of PE. They have given example that storing, displaying, or delivering of the goods of the non-resident person. Storing, displaying, delivering of the goods belonging to the non-resident person, it will not be considered that the non-resident person has a PE in the UAE. Keeping a stock of the goods of merchandise belonging to that person. You are maintaining a stock for the sole purpose of processing. You are maintaining the stock only at the end that person, non-resident person, is processing, or any other person is processing. If the non-resident person is processing, then it will become PE. If you are only storing the stock and giving it to any third party and third party processing it, then it will not be considered PE of the non-resident person in the UAE. Purchasing goods or merchandise or collecting information for the non-resident. If you have office in the UAE, this office is only collecting information, providing to the non-resident person, not acting as an exclusive agent for the day-to-day business operation, negotiating contracts, only collecting information for the non-resident person. It will not become a PE of the non-resident person. Conducting any other activity of a preparatory or auxiliary nature for the non-resident person. Any sports activity that you are providing to the non-resident person, it will not become PE. So combination of these activities. So these are basically sport activities. If the any office, any company, any third party in the UAE providing, storing, displaying, keeping stock, purchasing goods, services, any sport activity providing to the non-resident person, all these will not fall under the definition of PE of the non-resident person. But there are exception of this clause. And this clause exception has been discussed on the Article 14.4, 1.4, subclause 4. That if the non-resident person or its related party carries on business activity at same place and other place, there is a possibility. Okay, the non-resident person or its related party, they have one manufacturing facility in the UAE, and this is a branch. That branch is providing, doing the manufacturing. From the manufacturing, goods are coming from that branch to the market on the mainland or anywhere in the UAE where the goods are being stored and these goods are being sold. So manufacturing is being done. Basically, PE by the same non-resident person or PE by the related party of the non-resident person is already in the UAE, but at the same time, they have one sport services facility as well. The law says if the non-resident or their related party has any PE in the UAE and they are providing another sport facility anywhere in the UAE, then they say this sport facility, this PE, it will be altogether will be considered PE of the non-resident person in the UAE. Let's read this clause where the non-resident person or its related party carries on a business or business activity at the same place or any other place. Same place or any other place. Same place means from where or any other place where all of the following conditions are fulfilled. The same place or the other place constitute a PE of the non-resident person or the related party. As I mentioned, the related party or the non-resident person, they have a PE, assuming they have PE in Abu Dhabi. Then they have sport services in Dubai. So Dubai and Abu Dhabi altogether, it will be considered PE of the non-resident person. That's why they said all these conditions needs to be fulfilled. So this is the PE of the non-resident person or the related party of the non-resident person in the UAE. The overall activity resulting from the combination of the activities carried out by the non-resident person related party at the same place is not of a preparatory auxiliary nature. Together will basically cohesive generation. One company is manufacturing, other company is selling. One is a PE in the UAE, other is a okay front shop. They are selling this all together. It will be considered PE of the non-resident person in the UAE. So coming back to the fixed establishment, we have gone back this. These are the fixed establishment. If these these are the fixed establishment, these are considered PE. If these fixed establishments are providing sport services, then it will not be considered PE. But if the sport services like this, they have already PE in the UAE, that PE along the sport services altogether is a cohesive business, connected business, then altogether it will be considered PE of the non-resident person in the UAE. I believe everyone is clear regarding this. The next is dependent agent. For the dependent agent, we have discussed if someone is exclusively working on behalf of the non-resident person, negotiating contract, concluding contract, or signing contract and giving it to the non-resident person for execution, or the agent who is negotiating the contract, but these are being approved by the non-resident person without any material modification. Almost same thing is being approved by the non-resident person. Then in the language of the law, then they said, if this is the case, then it will be assumed that the non-resident person has a PE in the UAE. So PE can be established only based upon the exclusive agent in the UAE, and that agent is carrying out the contracts on behalf of the non-resident persons or negotiating the contract which are ultimately being approved by the non-resident person without any material modification. Then it will be considered that the non-resident person has a PE in the UAE as well. But there are some exception to this. Exception to this is that if the agent is working non-exclusive agent, if one person is agent, that person is working for party A, party B, party C, charging on arm's length basis, they are not exclusively working for the non-resident person, then the law says it will not be considered that the non-resident person has a PE in the UAE. So one person is exclusively working at the direction of the non-resident person, exclusive agent, it will be considered PE. And if the agent is not an exclusive agent but an independent agent, then it will not be considered that the non-resident person has a PE in the UAE. Dependent agent, they said any of the following condition, if the agent is dependent, there's such presence, they said mere presence of the natural person in the state doesn't mean that a non-resident person has created PE in the UAE in any of the following cases. What are those following cases? If someone has stuck in the UAE due to the reason which are not in their control, then it will not be assumed that the person is based in the UAE acting on behalf of the non-resident person due to the circumstances which are not in their control. These can be temporary and exceptional nature, exceptional situation, or where the person is there, natural person being conducted in the state by a natural person, not part of the core income generating activity, means the person who is in the UAE, that person is providing only sport services. And the non-resident person doesn't generate any state sourced income. If these two conditions are being fulfilled, then we will say that the non-resident person has not exclusive agent in the UAE who is supporting them to generate the income from the UAE, then it will not be assumed that the non-resident person has any PE in the UAE. So basically for the agent, coming back to summary of the agent, if someone is exclusively working for the non-resident person, it will be considered that the non-resident person has a PE in the UAE. And if the exclusive agent is, if the agent is independent agent, the agent is not working exclusively for the non-resident person, then it will be assumed that the non-resident person doesn't have any PE in the UAE. Any temporary presence in the UAE which due to the circumstances which are not in the control of the person, then it will not be assumed that the person is in the UAE acting on behalf of the non-resident person, or the person who is providing a sport services in the UAE and non-resident person is not generating any income from the UAE, then it will be considered that the non-resident person has not any dependent agent in the UAE. The non-resident person PE will not be established in the UAE. So PE will only be established if the non-resident person has exclusive agent in the UAE. From that agent is negotiating, concluding the contract or negotiating and finally signed by the non-resident person, and from these contract the non-resident person is generating income, then it will be assumed that non-resident person has a PE in the UAE. These are the exceptional circumstances which has been given in the ministerial decision 83 of 2023. Temporary and exceptional circumstances, all these conditions needs to be satisfied. What are all these conditions? Exceptional circumstances of public and private nature cannot reasonably be predicted by the natural persons or the non-resident persons. intention to remain in the state with the exception circumstances, and they don't have any intention to remain in the state when these circumstances will come to an end. They don't have any PE in the UAE. They are not in the process of creating any PE in the UAE to generate the state source income. If all these conditions are being fulfilled, then we will say that these circumstances are temporary and exceptional in nature. If any of these conditions are is missing, basically, then we will say that these circumstances are not temporary, not exceptional by nature. So the first is the presence of natural person in the state due to the exceptional circumstances of public or private nature. So these are the public nature, exceptional circumstances, these are the private nature. Public nature, public health care measured by the competent authority, travel restriction by the competent authority, legal sanctions on the person, act of war, occurrence of terrorist attacks, natural disaster, force majeure beyond control. So these all are the public nature exceptional circumstances. Health issues of the natural person, their relative, fourth degree of kinship in the UAE, though this will be considered personal nature. So this is a detail for the personal and exceptional nature. Next is in the UAE, this is the third category. If you're going back to the definition, we have discussed here three categories. Article 14 says what article fixed or permanent place in the UAE, it will be considered PE of the non-resident person. If the person has habitually exercised exclusively working for the non-resident person, it will be considered PE of the non-resident person, dependent agent. Third was any nexus in the UAE. This is the third category that we are discussing now. When the non-resident person has a nexus in the UAE, though it has been given that these nexus generating any economic or business link to the UAE. If the non-resident person has any economic or business link into the UAE, then it will be at the discretion of the authorities, FTA, then they can classify as that the non-resident person has a PE in the UAE. Now, FTA, sorry, the one cabinet decision has been introduced. This is called nexus in the state. Nexus in the state means the non-resident person has any real estate in the UAE from where the non-resident person is generating any income. Now, in this cabinet decision, if you are going to this is for the purpose of paragraph C of clause 4 of article 11. Paragraph C of clause 4 of article 11. They are not asking article 14. This is the reason that I was asking that based upon this nexus, you cannot say that the non-resident person has a PE in the UAE. Based upon this, you can't say the non-resident person has a PE in the UAE because this decision referring the article 11 clause 4 subparagraph C, this cabinet decision is not referring the article 24 of the law. So this is the reason I believe that based upon this, it will not be considered the non-resident person has a PE in the UAE. But still, if the non-resident person has nexus under this cabinet decision, this nexus can be established that a non-resident person who is a juridical person, not a natural person, this is important. This juridical person has any investment in the real estate in the UAE from where they are generating income. They are liable to pay tax in the UAE. They need to get themselves registered for corporate tax purposes and they are liable to submit return as well. If this is a natural person and this natural person having investment in the real estate, this investment by the natural person in the real estate in the UAE, it will be treated a personal investment. It will not be subject to tax in the UAE. So at the end, I will say related to this nexus, specifically PE of the non-resident person, I believe FTA may issue some decision in the future that will give further explanation that how the nexus in the UAE by the non-resident person can set up, can be a PE of the non-resident person in the UAE. This is the taxation of the PE. This is very important slide. I have summarized the taxation of the PE, overall taxation of the PE in the UAE. This taxable person, it depends, this is a resident taxable person or non-resident taxable person. This resident taxable person, it can be a qualifying free zone person or it can be a non-qualifying free zone person. If the resident taxable person is a qualifying free zone person, this person can have a domestic PE or foreign PE. This is a Jafza. This is a Jafza. This is a head office or branch in the UAE. This is the overall UAE. This is the UAE, this inside, this is the Jafza. This is the rest of the world. Now this qualifying free zone person might be they have a branch on the mainland, might be they have a head office on the mainland. It will be considered domestic PE. It will be straightforward subject to tax. Any income this Jafza person is generating from the mainland company or from the branch of the mainland company or head office of the mainland company, it will be straightforward subject to tax and 9%. If this Jabza company has any foreign PE here, now this foreign PE, the law says Article 5 of the Cabinet Decision 100 and 2023. They said that the income generated by the qualifying free zone person from the foreign PE, it will be straightforward subject to tax at 9%. 0% will not be applicable. It will be straightforward subject to tax at 9%. And this income will not be considered while assessing the de minimis test. Then Article 24 of the law says that the resident person can opt that their foreign PE income and related expenses should not be considered for tax purposes. So you have the option. You wanted to get yourself subject to tax at 9%, or you wanted to opt, you don't want to consider the sales, expenses, income of the PE, foreign PE. It all depends upon you. We'll be discussing this in our coming slide. It is tackled by the Article 24 of the law. So the resident taxable person, it can be a qualifying free zone person. If you are qualifying free zone person, your domestic PE, income from the domestic PE straightforward subject to tax at 9%. Income from the foreign PE, it will be straightforward subject to tax at 9%, or you can opt not to be subject to tax and you will not be liable to consider any income, any expenses of the foreign PE. Then this resident taxable person, there is a possibility this resident taxable person has a non-qualifying free zone person. This resident taxable person is a non-qualifying free zone person. This can be a foreign PE or domestic PE. Means one group have multiple branches in the UAE. They have the multiple branches. It will be considered in their taxable income. It will be straightforward normal taxation. If this non-qualifying free zone person has a foreign PE, if they have foreign PE, the treatment here is same. This portion is same. Their income will not be straightforward subject to tax at 9%. They have option to opt not to be taxed. So if the resident taxable person, they have a foreign PE, they have an option to make an election that the income and related expenses of the foreign PE should not be subject to tax. It should not be considered for while calculating the taxable income of the resident taxable person. Non-resident taxable person. Non-resident taxable person, there is a possibility this non-resident taxable person, assuming one company in UK, this company, there is a possibility this company has a branch in the UAE, or this company has a subsidiary in the UAE. If this company has a subsidiary in the UAE, we have already discussed, it will be treated like a resident taxable person, 100% similar like this. So if this person has a branch in the UAE, this branch can be a qualifying free zone person. Once this is a branch, it has become PE, because we have already discussed. If the non-resident taxable person has a branch in the UAE, this branch has become a PE. Now this PE can be a qualifying free zone person and non-qualifying free zone person. Important thing is here I wanted to highlight that the branch of a non-resident person can become a qualifying free zone person as well. The branch of a, I'm repeating, the branch of a non-resident person as per the provisions of the law can become a qualifying free zone person as well. If the branch is a qualifying free zone person, then the law says income pertaining to the PE of the non-resident person will be subject to tax in the UAE. If the branch is qualifying free zone person, 0% tax on the qualifying income and 9% tax on the non-qualifying income. This non-qualifying income, there is a possibility. One very important discussion, I was speaking to my team as well today. I was speaking to Faiza and along with other team members as well. If this non-resident, if this qualifying free zone person has a PE, domestic PE or foreign PE, there is a possibility, right? Domestic PE and foreign PE. Means this branch exclusively hiring one agent on the mainland and mainland is only working for this branch. Will it be considered PE of the qualifying free zone person of this person, or will it be considered PE directly of this person? I'm repeating, if this qualifying free zone person has exclusive agent on the UAE mainland or in Saudi Arabia, And these exclusive agents, if they have exclusive agent in the UAE, it will become a PE of this person, qualifying free zone person. If this person is exclusive agent in KSA, it will become a PE of the qualifying free zone person. So my question is, will it become a PE of this qualifying free zone person, or will it become a PE of the non-resident person? Law is silent on this. Law says basically PE of the non-resident person. So means if one person is exclusively working for this qualifying free zone person, law says PE of the non-resident person. Law is not asking PE of the qualifying free zone person. So I don't have very honestly answer for this, but based upon the essence, based upon the structure of the law, if this agent is exclusively working for the qualifying free zone person, for this qualifying free zone person, income should be subject to tax here in the UAE as well, and it should be straightforward subject to tax at 9%. This is what I believe, but we need more clarification on this. In the same way, this branch has a non-qualifying free zone person. If this branch is a non-qualifying, this is the branch, but this is not a qualifying free zone person. So income attributable to the UAE will be subject to tax in the UAE. Up to 375%, 0% tax will be applicable. Any income beyond that, it will be subject to tax at 9%. And this subsidiary, we have already discussed, it will be treated as standalone, separate entity, and treatment will be 100% like a resident taxable person. Taxation of foreign PE. I have just discussed here. You can opt here. You can make an election under the Article 24. You can make an election. What election? That you don't want to consider the income and related expenses of the foreign PE. But this is subject to certain conditions. These conditions are: make an election not to take into account the income and associated expenditure of its foreign PE. This option is available to the resident person. Resident taxable person can opt this. The election is foreign PE, which are 9%. This, you can only opt it if your foreign PE is at least paying 9% or more corporate tax or similar tax. If your taxation is lesser than this, you can't opt for this. Means this taxation in the jurisdiction where this foreign PE has been established. If opted, then the resident person shall be treated as an independent person. If you have opted it, that you wanted to, you don't want to consider the income and expenses of the foreign PE should be considered for calculating the taxable income, then the law says you need to consider an independent person. Every transaction with the foreign PE should be at the arm's length basis, because initially foreign PE, local PE, these are not related parties, by the way. Foreign PE, main company, resident taxable person, foreign PE, this is the one company, and branch is the extension of the main company. You will be doing transaction not at the market value. Then the law says basically if you have a branch, you need to treat it as an independent person. All your transaction with those should be at the market value. And moreover, if you are applying for exemption under this Article 24 of the law, then the law says this will be applicable on the all foreign PE of the resident person. You cannot pick and choose. This will be applicable on the all foreign PEs. But the criteria, these all foreign PEs are at least paying 9% tax in the respective jurisdiction or similar tax. So once you have opted this, then losses you will not consider, income you will not consider, expenditure you will not consider, you will not be taking any credit for the foreign tax credit related to that foreign PE. So it will altogether, it will be removed from your books. And if you don't want to avail it, then you need to include. Once you are included, the income will be included. Your expenses will be included based upon the UAE law. You can't say that based upon the foreign law, you have paid the tax over there, you need to consider that same number, you need to include. No. You need to consider the income, you need to consider the expenses, you need to allow the expenses, add the expenses exactly based upon the requirement of the UAE law. You need to do the reworking again to arrive at your taxable profits. Once you are arriving at the taxable profit, you need to calculate the exactly tax. Whatever the tax you have already paid out of the UAE, you can avail the foreign tax credit if you are not opting this. But if you are opting this, you are not liable to consider income, expenses, and you cannot take the foreign tax credits. This is the Article 5 as I referred here. This is the Article 5 of the Cabinet Decision 100 and 2023, which says that the income income from the domestic PE by the qualifying free zone persons or from the income generated by the qualifying free zone person from the domestic PE on foreign PE, it will be straightforward subject to tax at 9%. It has been given here. You can go through this. states some other provisions of the law. What are those other provisions of the law? Income shall be considered state source income if this income is being derived from from a non-resident person, and the income received, paid, accrued in connection with the. I just wanted to give you an example. This is a UK company. This UK company is the parent company, is basically head office of the UAE branch. This is a UAE branch. This is a UAE branch. A UK company is the head office of this UAE branch. UAE branch, UK company places an order to a European company. This is a European company to deliver some goods to the UAE. So at the end, when the goods are being delivered from this European company to the UAE company, or UAE company places an order to the European company, when the goods are being delivered or services are being delivered from this European company to the UAE company, for the payment of these goods and services, UAE branch is not making money. A payment is being made by this UK company to the UK company to the European company. Now, if this European company is generating any income from the UAE company, but the payment for this income is being made by the UK company, then the law says this is a state source income. Even the payment is being made from the UK company to the European company, but this income is attributable to the UAE branch. It will be subject to tax in the UAE. Now read this clause. Where it is derived from a non-resident person, income has been, where it is derived from the non-resident person, and the income received has been paid or accrued in connection with the attributable to the PE of the non-resident person. If income is attributable to the PE of the non-resident person, but this income has been paid by the UK company to the European company, but still this income is attributable to the UAE company, so this income will be considered state source income. It will be subject to tax in the UAE. So tax group, PE can become a part of the tax group. Is a one PE, no need to enter into tax group because the resident person and juridical person connection is the one will be parent company, other could be subsidiaries. If HSBC has 50 branches in the UAE, if HSBC has 50 branches in the UAE, can they form a tax group? Yes, in the language of the law, it will be considered one taxable person. So they will be liable to submit one return, and main branch will be leading as a part of the basically. So tax group concept is there. Yes, PE can become a part of the can be considered one taxable person if the multiple PEs are there. Transfer within the qualifying group. Yes, PE can enjoy the relief of the qualifying group as well. So if there are two entities within the UAE, again coming back to this, a UK company has two branches. One branch is here, A in the UAE, one branch is here in the B in the UAE. This branch is transferring money to this. Okay, sorry, not branch. This is subsidiary. This is a subsidiary, or this can be branch as well. This is the one branch, is a second branch. This branch is transferring goods A to B. Then they said they can enjoy the qualifying group relief as well because they are under the umbrella of 70% requirement of the law. Business restructuring relief, yes, you can enjoy the business restructuring relief as well. Article apply where all of the, basically in the article 27 of the law says that you can transfer the business as an independent part of the business to another party without considering the gain and loss at the book value. If you're transferring this, then you're not liable to consider any gain or loss. So this, if this clause is being applied, if means if this business is being transferred, the condition is transferred undertaking, all conditions are being met, the taxable person, the resident person or non-resident of the PE in the state. So if this is again A and B, these are the PE of the non-resident, this is the branch A, this is the branch B, and this is branch A is transferring any asset from A to B, then they said they can enjoy business restructuring relief as well. So PE can enjoy business restructuring relief, PE can enjoy qualifying group relief. Withholding tax is there. Withholding tax, we know this, if this any non-resident person is generating any income from the UAE, this is UAE, if this non-resident person is generating any income from the UAE, withholding tax 0% will be applicable. Then the law says we need to make sure this income that the non-resident person is generating, it should not be pertaining to the PE of the non-resident person. If it pertains to the PE of the non-resident person, then it will be considered then PE rule will be applicable. Then it will not be considered 0% withholding tax. Then we need to, this is the PE, they need to get themselves registered. Once they are registered, then we need to assess if this is the qualifying free zone person or this is a non-qualifying free zone person? Will it be subject to tax? We need to decide accordingly. Basically, we cannot say the income is pertaining to the PE of the non-resident person. This is being generated by the non-resident person. It should be 0%. No, income generated by the non-resident person, it can be UAE sourced income. It will be subject to 0% withholding tax, provided this doesn't pertain to the nexus in the UAE. This doesn't pertain to the PE of the non-resident person in the UAE. So, example I have given, if this pertains to the branch, or if this income is being generated by the property, this is a nexus, this is a nexus, this is a nexus, it will not be considered 0% withholding tax. But if this non-resident providing is any services other than the PE, other than the nexus in the UAE, then 0% withholding tax will be applicable. This is over from our side, and thank you very much for being with us. If you have any question, I'm here, Faiza is here, and Shahid is here, and rest of the team member, Anwar is here as well. So I have a few questions from your side. Kindly address the question that non-resident juridical person with PE in the UAE jobs are. I think I have already addressed it. This was basically, yes, non-resident persons, if they have a PE in the jobs, they can become a qualifying free zone person, they can become a normal person. I think we are discussed in detail. CT registration issues for non-resident juridical person with PE in the UAE jobs are PE registered this, so it means foreign business with the UAE trade license. Questions 1, 2, 3, 4, 5, 6 questions all together in one large paragraph. Can you drop me an email? I'll come to this. I have already told you the situation. Basically, if this is the Jobsa company PE of the non-resident person, you can become a qualifying prison person. You need to get yourself registered. Your PE income in the UAE subject to tax in the UAE. Your questions are data of when the activities were first conducted in the UAE. Date. So it means foreign business with the UAE trade license. Foreign business UAE trade license. Date of when the activities was conducted in the UAE. I don't know when you have conducted the activity. You know better than me when these activities were conducted in the UAE. The date of existence of PE in the UAE from the date of the effective date of the law. First corporate tax period start date. First corporate tax, you need to check your financial year. And if this is sole establishment, which is not usually in the free zones, jobs, it will be a juridical person. What is your financial year? It will be same. It will be starting from 1st of June 2023 for the next 12 months or maximum up to 18 months. You can increase your financial year up to 18 months, reduce up to 6 months. You need to decide what should be your financial year, but primarily this is same like this. What your financial year, this is same your tax period. First
Yes, Saeed, I would suggest that if you can drop us an email because this question is related to the registration.
Okay,
And
this is a very
asking
long
about
question, by the way. I'm
that.
quickly going, I'm leaving it. Then one more question, if company registered in free zone have branch office in mainland, registered in free zone, branch office in mainland, okay, whether branch office will be considered PE? Yes. If your free zone company is a qualifying free zone person, it will become domestic PE. If you are not a qualifying person, still it will be considered PE and income will be collaborated in a normal way. Then straightforward 9% tax will not be applicable. All activities are being conducted in the mainland branch. All activities are being conducted in the mainland branch and nothing is done in the free zone. Listen, if you have a main company in the UAE, branch in the UAE, you are not a qualifying free zone person. Altogether, it will be considered one company. You need to consolidate the income and one registration. You are not going to do the multiple registration for the mainland entity or for the free zone company. Request to share the slides. Okay, I'll send it to you. Thank you very much, guys. I really appreciate it. Thank you very much, Faiza. And if you have
Thank
further
you.
any question, you can drop us an email.
Thanks for watching the video. Click on the bell and subscribe to the YouTube channel.